Good day, grade 12 ABM students. Our lesson for Fundamentals of Accountancy, Business and Management 2 is about bank accounts and transactions. For our learning targets, at the end of this video, you must be able to identify the types of bank accounts normally maintained by a business and prepare bank deposit and withdrawal slips. To start our lesson, recall that assets are resources owned by the company. Companies place controls to safeguard their assets to ensure resources are not misused or misappropriated. Cash is an important asset of the company. It is one that is easily misappropriated if not properly safeguarded. Bank accounts are at the center of critical control policies for cash. All cash receipts should be deposited in the bank at the end of the day. Very minimal amounts should be left in the company's premises overnight. Also, cash payments should be settled through bank checks and processed through the voucher system. Let us now discuss the different bank accounts. First we have here is a savings account. The simplest bank account is the savings account. The business deposits money in the bank for safekeeping. The account earns minimal interest and may have a minimum balance requirement. Some savings accounts are linked with passbooks. A passbook is a booklet used to record bank transactions on a savings account. It contains a chronological record of deposits, withdrawals, and interest earnings. On the other hand, some saving accounts come with an ATM card. ATM cards are used for making transactions in automated teller machines, or we know as the ATM. Some ATM cards also function as debit cards. Debit cards are linked with the Visa or MasterCard networks that allow depositors to use their cards to make payments in various establishments. Some banks give their depositors internet banking privileges. This allows them to access their statement of accounts and make payments online. Withdrawals from savings account may be made over the counter, ATMs, online payments, and debit card transactions. Checking account. A checking account is like a savings account with an added feature. The depositor can issue bank checks. Bank check is an acceptable form of payment. It allows depositors to pay large sums using one sheet of paper instead of carrying currencies. Also, bank checks provide additional control feature that prevent misappropriation of cash. A payee can be specifically named such that no other person or entity can use it. Moreover, a check can be crossed or restricted for payee's account only. This means that the check will only be accepted for deposit to the payee's bank account and cannot be in cash over the counter. Checking accounts rarely earn interest because of the fast turnover of transactions. As a result of the fast turnover of transactions, checking accounts rarely earn interest. To cater to their customers' demand for better interest rates, most banks offer hybrid accounts. These are combinations of savings and checking account. There are ATM passbook checking accounts. There are also hybrid accounts that earn higher interest rates but limits check withdrawal to a few checks a month, such as premium deposit accounts. Time deposits and other investment accounts. Savings and checking accounts are transactional in nature. Companies maintain checking account in order to use bank checks. On the other hand, time deposit accounts are investment placements. Depositor agrees not to withdraw the funds over the contracted period in exchange for fixed interest rates that are higher than deposit rates. Time deposits are evidenced by certificates of time deposits or the CTD. Banks also offer unit investment trust funds or the UITF. This allows investors to gain the benefit and suffer the losses of investments in stocks and bonds without directly investing in those securities. Basically, investors purchase units of the pooled funds. For example, if the investor wants to buy 1,000 units of the chosen pooled funds at 1 peso per unit, then the investor should pay 1,000 pesos to the bank. The money will be part of the pooled fund managed by the bank. In UITF, the investor earns income not through interest but on the increase in fair market value of the pooled fund. For example, if the price per unit became 1 peso and 50 cents, then the investor can choose to keep his units or liquidate. If he liquidates, he gets 1,500 because 1,000 units multiplied to 1 peso and 50% per unit, and earn a profit of 500 pesos. But what if the price per unit dropped to 0.90 peso per unit? Again, the investor can choose to either stay in the fund and wait for the prices to increase, or sell now if he is afraid that prices will continue to decline. Depending on its banking license, the bank can offer other forms of investment vehicles to their clients. There are mutual funds, variable insurance, government securities, corporate notes, among others. But now, we will limit our discussion to time deposits and UITF. Bank forms. There is a corresponding bank form for almost every transaction with the bank. Take for example the opening of a bank account. The forms to be filled and signed are numerous. There are account opening forms, signature cards, investor sustainability forms, and indemnity forms. Don't worry, we will not discuss all of these forms here. We will limit ourselves with the deposit slip and withdrawal slip. Moreover, we will only look at the basic format of these forms. Most banks have their own formats which are tailored to their needs. The deposit slip. A deposit slip is used by the depositor to put money in the bank. Deposit slips are uniquely designed for the specific need of each bank. However, the essential information required to make a deposit are the same. Withdrawal slip. A withdrawal slip is a written order to the bank used by the account holders to get money from his or her bank account. At this point, we will discuss the steps in preparing a deposit slip and a withdrawal slip. The following information are to be written in the deposit slip: the date, the account holder, make sure to write the complete name of the account holder, the account number, to make sure that deposits are credited to the correct account. This is usually found in the first page of the account holder's passbook. Next, the type of account. Is it savings or current? Then the currency, amount in words and in figures, the amount of the deposit, and then the details or breakdown. Deposits may be in form of cash or check. For cash deposits, the breakdown of cash is listed. For check deposits, the issuing bank, address of the issuing bank, date of the check, and the amount of the check is listed. For the sample withdrawal slip, the information present in the withdrawal slip should include date of withdrawal, account holder name, the account number, the type of account, the currency, and the amount to be withdrawn in words and in figures. Signature of depositor is an important part of the withdrawal slip. It is a proof authorizing the bank to release cash to the bearer. The signature is usually compared to the specimen signature provided upon opening the account. There may be occasions when the depositor cannot personally withdraw the funds. In this case, he or she may authorize a representative by indicating the name of the representative in the space provided where the representative must sign and present his or her identification card. Thank you for watching this video. For your questions and clarifications, you may send them in our class group chat or you may raise them during our Zoom meeting. Good luck and God bless you all.